Hello and welcome to Trading Mastermind, where we help you become a better trader through accurate price action trading. In this video, I'll be showing you a price action strategy involving divergence. It is a swing trading strategy, and if you trade it correctly, it can give you some amazing results. Before I get started, it is important for me to let you know that when trading any market, you are carrying a significant level of risk, and you should only ever invest money you can afford to lose. Please drop a like on this if you found it valuable. Comment down below with any questions or suggestions you may have, and subscribe to the channel for regular price action trading content. Let's get started with the strategy. Okay, so with this particular strategy, it is a swing trading strategy. We are looking at the 4-hour time frame. In this particular example, we are looking at Euro USD as our instrument that we are trading. However, it does work with any currency pair or even something like NASDAQ. But yeah, let's get started with the strategy. I think before we really dive into everything, it's important to understand what divergence is and why it's so powerful. So for our divergence, we are using the RSI indicator 14, and we just have a 4-hour candlestick chart over here. We are doing a swing trading strategy. However, divergence is super powerful. It works with a multiple of time frames, just about any time frame, any instrument. It is most likely our favorite way to trade. It is a really good way to trade. It yields some amazing results. It's got a very high profit rate. It's important to note that in any trading strategy, you are always going to have losses. That's just the name of the game. But what's important is to have a good risk management strategy in place, or risk management techniques. And if you have that in place, losses don't matter. And in this case, we find that divergence does give you a very high win rate as well. So you're not going to lose more trades than you profit. You're most likely going to profit a lot more than you lose. So with this divergence strategy, like I said, we're on a 4-hour chart and we're using the RSI to spot our divergence. Now, what is divergence? Divergence is usually a reversal type type pattern. Whether you're going in the overall trend or whatever, that doesn't really matter. We are spotting reversals from the immediate price action. So what divergence is if you've got a downtrend, you are looking for that downtrend's momentum to shift into an uptrend, and you are then jumping in on that uptrend early. That's essentially what we're looking for. So as you can see here, we've got a lower low, lower high, lower low. That shows us we are in a downtrend. Okay, now what divergence is where you have the opposite effect happening on your indicator, in this case the RSI. So in this case in particular, we've got a low met with a low on the RSI, and then we have a lower low on the price, on the actual price chart. However, on the indicator, we do not have a lower low, we have a higher low. That gives us a divergence setup. So we have the opposite happening over here to what is happening over here. Let me just draw it out on the chart just so it's easier to spot. So right here we have a low and a lower low. On the RSI, we have our low met with this low, and instead of a lower low, we have a higher low. So as you can see, what the indicator is telling us is that momentum may be making a switch to the upside. As you can see, it did that in this case, and here we are looking to now take a trade. Because we have our divergence setup, we are not just going to blindly trade. We do have a specific technique that we are looking to use in order to get in, and that is exactly what we're going to have here. We've had a low, a higher, a lower high, sorry, a low, a lower high, a lower low, a lower high, but then this low does not get broken. So what we're looking for here is, now that we have our divergence, we know we are looking for a buy because of our indicator suggesting that momentum may be shifting to the upside. And in order for us to place a buy, what we really want to see is a trend change, a break of a level and a retest of that level. If we do not have all of those things, we do not take a trade whatsoever. Okay, in this case, we would have most definitely taken a trade. So what happens is, once we have our divergence, so we are looking from here for a trend change first and a break of a level, which we can clearly see we have here. So we've got the low, the lower high, and then instead of a lower low continuing a downtrend, we have a higher low formed, forming this as our next resistance level. So as you can see right here is our next resistance level. It is then broken, signaling to us that we do indeed have a trend change. From there, we are looking for a retest of that level and some sort of a signal that price is going to be moving off of that. So as you can see right here, we definitely had the retest. If it goes for a retest but does not give us some sort of a candle signal, we are also not going to take this trade. We are only looking to take off of signals, candle signals. So we've got a retest, and this candle here in particular, to me, looks like a great retest signal. We have a pin, price is rejecting. We would have looked to take a trade right over here. Place your trade over there. Stops below the low, so we would have had stops of around 60 pips, and then you always want to go for at least a minimum of a 1-to-1. However, we do prefer a 2-to-1, so a 2-to-1 would have set us for a 120 pip take profit level, which, as you can see up there, we've already got 170 pips. So that is exactly what we are looking for. We are looking for our divergence, which we have seen with the price correlating with the indicator suggesting to us that the momentum may be shifting. We then do not want to blindly trade. You will find plenty of times where you see divergence, and if you blindly trade, price just continues to move. That is why we want extra confirmations. We want to clearly see that now that we have the signal to be looking for a momentum shift, we want to actually see that momentum shift by a trend change, which we have had here. Price goes up, comes down, does not break the previous low, comes up and breaks this previous level of resistance that had been formed. We then want a pullback so we can get in as low as possible. We want a retest of this level that has been broken. We have that. We have our first candle signal. In the moment, you may or may not have taken this one, but after something like this engulfing candle coming straight off of the level, we would have 100% most definitely taken the trade. Let's just see if we did take the trade off of that instead. We would have had a stop of around, let's just call it 80 pips, with a take profit of around 160 pips, which, I mean, as you can see right up here, we've got at least 200 pips of profit. So this is a great divergence, break and retest momentum shift signal. Great trade. So there it is, our powerful divergence swing trading strategy. It is very simple to trade. It yields extremely good results, and I'd highly recommend trading this strategy, obviously with a good risk management technique implemented. That goes without saying. That is very important no matter what strategy you are trading. But I hope you found this video valuable. If you did, please give it a like. Comment down below with any questions or suggestions you may have. And please subscribe to the channel for regular price action trading content that will help you become a better trader. Cheers, and see you next time.